This dichotomy versus the Fed and Treasury is very interesting. The Fed very tepid on its economic forecast, using that to justify its asset purchases, the so-called quantitative easing that we see every month. The Treasury, though, this week coming out with a very buoyant look as far as the forecast goes. Now, this could just be seen as two bureaucracies kind of, maybe not being on particularly the same page. Where it gets very interesting, though, is Janet Yellen has been nominated to succeed Ben Bernanke as the Treasury chairman. Now, she's got confirmation hearings that are going to be coming up very shortly. Those hearings could end up being very contentious, and one of the things that you could see is the people questioning her from Congress bringing out, hey, Mrs. Yellen, Treasury here is saying that the economy is doing much better. Why are we still printing $85 billion a month and using this to prop up the economy when obviously we're starting to get to some type of escape velocity with the economy? So it's going to figure in very much as far as Fed policy goes, and it could also figure in as to how hard of a time Janet Yellen gets in her confirmation process. Market-wise, you've got to watch this very closely because the market's been so dependent on Fed money. If there starts to become increased political pressure for the Fed to pull back, then that bleeds over into the market. People start getting scared. We saw what happened in May when Ben Bernanke first raised the possibility that the Fed could start to cut back or taper its asset purchases. The market really reacted sharply to it. So if this starts to bleed over into the Yellen situation, into the Fed chairman situation, could send a rough signal to the market in terms of what Fed policy is going to be for the future.